I got an email yesterday. So the question though was, I'm looking for a 5% pullback to put my money to work. That's a dangerous statement. So here's what you need to know before the bell this morning. Should I wait for 5% corrections to put money to work? Probably not. 5% corrections occur once or twice every single year. 5% corrections are normal. They happen every single year. 10% corrections happen at least once a year also. We just say, just this year, we had a near 20% correction back in April. We just had a 5% correction in the first 2 weeks of November. So if I'm always waiting for a 5% correction to put money to work, that becomes a problematic issue. Again, your window is too short for that type of investment strategy. 5% corrections occur all the time. Let me show you some examples of what I mean. Let's just look at a chart of the markets. And let's just pick a point here real quick. Let's just say that we just, randomly bought right here at this peak of the market. And again, this is completely fine, right? We buy here and we put some money to work. And yeah, the markets have a correction following that. Okay, so I'm down a little bit right now. But now let's start moving forward, right? Markets start to rise, rally, and then we say, okay, I'm going to wait for the next 5% correction to put money to work. Well, the problem is that 5% corrections, yes, they happen, but by the time they happen again, this was a 5% correction right here, you've given up potentially all of these gains just to get this correction of action. And again, so if we keep moving forward, let's just keep waiting. We say, okay, well, we're going to wait for the next 5% correction to put money to work. And again, we're eventually going to get there. But the problem is that when we eventually get there, again, we've given up a lot of gains to get to this 5% correction. This is the problem with waiting for very small minor corrections in the market. You're going to wind up giving up a lot more of your gains. You're better off just investing in the markets and then saving some cash. Every month when you get paid, put some money into a bank savings account, whatever it is, put it to a money market account. And then when you get these 5% corrections, have some cash available to add to them. But but putting your portfolio into an all defensive position, waiting for a 5% correction, you're going to wind up giving up a lot more gains over time. Markets rise over time. And this is really kind of a key critical point, is that markets continue to rise over time because of inflation, because of economic growth, because of all these things. Yes, you're going to have corrections. As I said earlier, absolutely. We had a 5% correction just a couple of weeks ago right here, and now we're starting this recovery process. And so you're saying, okay, I'm going to wait now until I get the next 5% correction. These corrections happen consistently over time. And so again, we want to maintain some type of exposure to markets to capture the growth of the markets over time. That's going to happen. But trying to defensively, position your portfolio and time market entries is you're going to give up a lot of your returns over time, give up a lot of your gains, and really impair your portfolio returns over time. This is just one of those things. But this is, again, 5% corrections, absolutely normal. That's normal volatility. You should expect that in your portfolio whenever you invest. That's just a function of being in the markets. What we want to try to avoid is the 30, 40, 50% declines, and there's no evidence of that occurring in the markets anytime soon. Right now, we don't have the makeups, we don't have the credit events, we don't have any other type of issues right now, at least showing up in the markets. Again, this is why we watch credit spreads, this is why we watch a lot of other indicators that would pre-warn of a much larger drawdown in the markets. Those don't exist right now. Volatility is low. Lots of exuberance over the markets. Again, markets are going to trend higher here, at least for the time being. But again, worrying about a 5% correction, you're going to give up a lot more than you're going to protect on downside. As Peter Lynch once said, he says, more money has been lost predicting bear markets than the actual bear markets themselves. So again, just kind of keep that in mind. That's what you need to know before the bell this morning.